Hello and welcome to ADM's latest market roundup. My name is James Forster and I'm going to be talking to you about the oat market. Today, I'm going to be focusing on the main market influences that have been affecting the UK oat market this season. Primarily, we have seen poor quality and production in the Baltic states, lower production and quality in Finland, and Canada has seen one of the worst droughts on record. Why is this significant, you may ask? Well, Canada is the largest exporter of raw oats in the global market. Therefore, given a drop in supplies of 32%, the demand requirements from importing nations will need to be covered by other exporters, which does include Europe. The EU balance sheet, according to the EU Commission latest report, showed that ending stocks, if realised, would be 128% increase on the 5-year average. This would suggest that the market is well supplied in Europe and we should see some good flow of exports into North America to make up some of Canada's shortfalls. Just to put a bit of context onto the Canadian situation, the area of Western Canada's two largest oat producing provinces, Saskatchewan and Manitoba, is a region that supplies the vast majority of oats to commercial North American oat millers, including most of the major Canadian and US mills, are looking at a 41.4% reduction in supply, which equates to just shy of 1.5 million tonnes. This, of course, is a huge drop and is why the normal trade flows will not be the same, and gives the EU a big opportunity to make up some of that demand. So what does this mean for UK suppliers? Well, according to latest official DEFRA figures issued on the 14th of October, production of 1.1 million tonnes is the largest in over 5 years and would see a carry-out figure of 40 to 45% higher than the 5-year average. Quality in the UK is also variable, with many samples testing sub 50 kilos, but millers are taking these parcels on fallbacks to between 45 and 47 kilos, depending on the mill, which is helping. Due to the shortfalls in North America, as I said, exports from Europe will flow, but we expect this to largely be made up from supplies from Sweden and Finland due to the phytosanitary requirements for North America, whereby the presence of wild oats is not allowed, and therefore the UK is likely to see exports flow into Western Europe rather than North America. In terms of price direction, milling oats look well supported due to the good global demand, as seen from high usage for oat milk during the COVID pandemic, and of course the shortfalls in North America. However, I would stress that UK farmers should be mindful of logistics, especially in the on-off deck position, as this is very much covered by mills so far, unless there is increase in demand or a higher export program. But given the lack of trucks and haulage, I would suspect that this will be a continued problem, and therefore farmers should look to make sales for January onwards. In terms of values, milling oats are worth anywhere between 165 and 175 ex farm for most growers, but given the wider supportive nature of the global grains market, we could well see prices move higher in coming months, especially if the exports start to flow into the North American markets as we are anticipating. Feed oats look very cheap, with values of between £30 and £40 discount to feed barley, and we have seen some export sales made over the last few weeks that would support this market going forward. But bottom line, as I said, they look cheap, and we could see on-farm usage higher than what is currently being forecasted. General conclusion, oats will be likely to see strong price support in the coming weeks. However, the rally in oats may not follow in line with the likes of wheat and barley due to the lack of liquidity in the market. As ever, please speak to ADM representatives for any further market information, and we'll be happy to help. Thank you.